for the next season, 2018-19, we expect soybean prices to come under pressure. The pressure will be mainly seen in 2019. At the moment, soybean prices are still supported by the low supplies in South America, but once the new South American crops come into the market in early 2019, we expect considerable price pressure in soybeans, unless we get weather problems in South America. At the moment, we expect world production of soybeans to rise by 30 million tons, creating a surplus of production over consumption of probably 20 million tons worldwide. And this is likely to create price pressure. We expect futures prices in the Chicago Board of Trade to fall below $8 a bushel. One of the swing factors to watch is what is going to happen with the US-China trade war, which has recently intensified. At the moment, China is not buying any soybeans out of the US. They try to cover their requirements from other origins, and we see some remarkable changes in the trade shifts that Argentina and Brazil are importing US soybeans, and Argentina and Brazil are exporting their domestic soybean to China, and a lot of big changes in trade flows. Still, China will not be able to satisfy its import requirements in October, February without US soybeans, and this is creating a tightness in China, which is reducing the Chinese soybean crush and the soya oil and soya meal availability. Big changes, and we have to watch to what extent China will increase imports of other commodities, like, for example, soybean meal or rapeseed meal, sunflower meal, or rapeseed oil, sunflower oil. So we have to watch this, also fish meal, and this could have major repercussions on the world market. So there's a lot of uncertainty at the moment, but putting everything together and assuming that the trade war is continuing, we are facing downward pressure in soybean prices and also soybean meal prices in 2019, and vice versa, an appreciating price outlook for vegetable oils under the lead of palm oil for 2019. We are expecting world demand for palm oil to pick up in the next 12 months. And this has several reasons. The first is palm oil at the moment is very attractive in the energy sector. Palm oil prices are way below prices of fossil fuels, and as a result of that, the consumption of biodiesel is picking up. Also, and palm oil is a major feedstock, like soybean oil or rapeseed oil, for biodiesel. So biodiesel consumption is picking up because of the low prices of vegetable oils. Second, the world will need more palm oil in the next 12 months because of a below average growth in world production of soybean oil. So we expect world trade and world consumption of palm oil to show an unusually large increase in October, September 2018-19. And although at the moment we have a surplus in October, December 2018, we are still building stocks. This, in my opinion, is largely already discounted in current palm oil prices, which this week were at a new 4-year low of $500 for Indonesian palm oil. This is already discounted for 2019 For January-September 2019, we expect world consumption of palm oil to exceed production. Stocks are likely to decline, and this should result in at least some increase in palm oil prices. Difficult to say how much. If we get any problems on the production side because of weather, of course the price impact will be stronger, but assuming normal weather, we should expect a moderate increase in vegetable oil prices in 2019 under the lead of palm oil. They will impact palm oil prices to some extent. We already have a situation at the moment in which palm oil prices are below the prices of mineral oil. This is stimulating demand of palm oil for the energy sector. If crude oil prices rise further, the attractiveness of palm oil will be even bigger, and the usage of palm oil as a feedstock for electricity production is even greater. So yes, higher crude oil prices would, from current levels, current prices are already very high, with Brent prices at 81 US dollars a barrel. This is very high already. If they rise further, it would be another factor supporting an appreciation of palm oil prices in 2019. But don't get me wrong. As long as we have large stocks, and we have very large stocks at the moment of palm oil in Indonesia and Malaysia, the price increase the price recovery we are expecting in palm oil will be moderate first. It's not a clear-cut bullish scenario. It's just that we will be building a bottom. We probably have done this already this week, or we are in the process of building a bottom with downward potential in prices very limited. Consumers now thinking about extending their coverage. If they do this, there is a lot of pent-up demand, with consumers waiting for the lowest possible price. If consumers start covering their requirements, their longer-term requirements, it would also help the market to build the bottom and slightly recover. The recovery will be moderate initially, and this is not a situation where I say it's outright bullish. It's a moderate price appreciation which I expect, which could accelerate in 2019, depending on the outcome of the many uncertainties.